Good morning, everyone. Good morning. It is Monday, October 20th, 2025. It is so good to see you all this beautiful Monday morning here in Austin, Texas. Yo, when are we going to get some rain? What is this, like a record number of days without rain right after a massive flood that we experienced? Now, all of a sudden, we don't get any rain. I'm telling you, it is either a flood or a drought. I don't think I'm ever going to get used to it. It is just terrible. We need some rain. We desperately need some rain. And then what a beautiful weather yesterday. And all of a sudden, we're back to the 90s today. I don't know about y'all. I'm ready for some rain. I'm ready for some 80-degree weather. I need some fall here in Central Texas. It is so good to see you all this beautiful Monday morning. Lots going on in the market. Lots going on with really just, a lot of stuff. So we are going to hit it hard, go over the new listing and pending ratio, the single best leading market indicator available for our area. Take a look at inventory, take a look at the economic calendar, and you can see behind me that we've had a really good past few days in the bond market, and that is causing a fairly decent improvement in rates. We're going to go ahead and start with rates. Let's do that. Let's start with rates. When you go to resources.teamprice.com and you go right here on mortgage rates, every time the amazing Robert sends me his rate sheet, I update this page. So if you ever want the latest and greatest rates, all you have to do is just bookmark, go to resources.teamprice.com, and then go ahead and take a look at mortgage rates, and you're going to see we're at 6.5% conventional, 30 years, 6 1/8, 15-year, right at 6% for both USDA and FHA, VA 6 1/8. We are very close to a repricing line right now. 10-year Treasury is doing quite well. We are right at 4%. Exactly at 4% for the 10-year Treasury. We're at 3.990 this morning, which put us a little bit under that repricing line. If we can continue to see that momentum that we saw last week with the improvement in rates, we could very well go back to the 6.375-ish or so, which would be amazing. Under 6% on FHA. That would be incredible if we could see that this week. It's going to be an interesting week because when you look at the economic calendar, all of the news that would have affected rates and really should affect rates, we're not going to get that information because the government is still shut down. So we're not going to get the CPI data that was supposed to be released here Friday. That's inflation. We're not going to get that. We're going to get the Michigan consumer expectation. We're going to get new home sales. What else are we going to get? We're going to get existing home sales. That's going to be really important for us in our industry. But otherwise, a lot of the information that would have affected us, we're just not going to get that information because the government is still shut down. So we're just going to have to play it by ear. We're just going to have to see what happens. And as you know, we always update this information. So please be sure to continue to join our meetings, our training, and continue to look at our internal Facebook group. I always post up-to-date information in our internal Facebook group. If you are not a member of our internal Facebook group, please be sure to join us. There is the link. I just went ahead and posted the link over chat. If you have never requested to join our internal Facebook group, please be sure to join that. Y'all, let's go ahead and get started. Lots going on, like I said, with the market. We're going to start by updating the new listing and pending ratio. Very simple, very effective ratio. We simply take everything that is new in the market, and then we divide it by everything that was absorbed by the market, and that's what we're doing. We're looking at that ratio. Let me go back to teamprice.com because when you go to Insight and Statistics, and then you look at the new listed and pending ratio, we define what is the ratio and what does it mean. Below 0.5, very cold market, strong buyer advantage. Extremely low absorption, fewer than 50 homes go under contract for every 100 listed. 0.5 to 0.6, substantial inventory growth, market is soft. 0.6 to 0.7, tangible, inventory is building. 0.7, 0.85, neutral, 8.5 to 1, leaning towards a seller's market. 1 to 1.1, seller's market. Above 1.1 is going to be a very strong seller's market. That's going to be your hot market. Now, at any time when you're looking at the ratio and you're like, well, what in the world does that mean? Just go to teamprice.com, go to Insight and Statistics, click on that new listed depending ratio, and you can just see. But bottom line, blue equals what? Cold. Blue equals cold. Red equals hot. And you can see when it's red, it's going to be a hot market. And we ended last week at a 0.67. But what we're going to do is we're going to go backwards in time a little bit. And we're going to take a look at any updates from agents that are really bad when it comes to updating data. So we're going to go from 10.6 to 10.13. Take a look at pending. This is going to go from 319 to 315. Let's take a look at active under contract, see if we have to update active under contract. That's going to be 462. Let's go the previous week, and that's going to be from the 29th to the 6th. That's going to be 449. That doesn't change. 22nd to the 29th. That's going to be 407. 15 to the 22nd. That's going to be 454. 8th through the 15th. That's going to be 450. Then this is going to be 429. I'm just going to do one more week to make sure that everything is updated. 462. There you go. Look at that. This is from, over 2 months ago, and people are still putting properties pending. That's going to be 475. Wow. A lot of old data that we have to update. I'm just going to go one more week, 469. Okay. So now it's all up to date. Now, most of the old data that's updated, builders are notorious for just keeping the property active on the MLS, and then they change it to pending. It's like, wait, that happened a month ago. That happened a month and a half ago. It's always going to be the case. It's just a battle that we're never going to win. What I'm going to do here is I'm going to go to the month and update the monthly really quick. This is going to be 1761, and now let us update September. That's going to be 1609. And now let me update the active under contract. That's going to be 1762. That doesn't change. And now we can start updating the weekly. This is going to be from the 13th to the 20th. Keep in mind, you all, that new listings, price increase, price drop, it all locks in at 11:59 p.m. tonight. So when you get the updated report tomorrow morning, the new listings, price increase, price drop, back on the market, it all locks in. Everything else is going to be updated a little bit, but the rest of it is going to be the same. Now, here's something very noteworthy. Take a look at open house. This was very surprising for me because of F1. I did not think so many agents were going to be hosting open houses during F1, but we had 3,814 open houses that were held. And that is the largest number going all the way back to May 12th. May 12th. We usually don't see such a high number of open houses towards the latter part. I had okay attendance at my open house on Saturday, iPhone 43 said. That is great. That's really good. A lot of people in the Austin area, a lot of people driving around. So that is awesome that you had such a great attendance. That's really good. So we are seeing an increase in open house. You know where I stand with open house? Big fan. Big fan of open house. Always have been, always will be. I will always enjoy open houses. Let's take a look at new listings. We are at 779. Looks like we had, 3801? Where's the 3801? Yeah, there we go, 3801. Okay, so that's June 16th. So thank you, Bertina. Eagle Eye Bertina, there we go. There was that 3801. So we did have a June 16th through June 23rd, 3801. There you have it. 779 new listings on the market. Price increase, we're looking at 115. Oh, there's a drop right there. We had 148 price increases the week before, 198 2 weeks. Price decrease, 1710. There's that 94%. We dropped down to 87%, picked it back up at 95%, 91, 93. We're now going back up. We're at 94%. That is the difference out of any price movement that happened. This is what this doesn't mean. It doesn't mean that 94% of all listings had a price drop. It means that out of everything over the past week that could have gone up in price or down in price, 94% of the price movement went down in price. What about back on the market? We are looking at 167. Wow, that's a high number. 21% back on the market. Interesting. Let's take a look at active under contract. We're at 314. And I'm not going to click on the pending quite yet. You know the drill. I need 5 guesses. 5 guesses back on the market. Or not back in the market, pending. We are starting off with Melanie Price at 215, followed by Harold, who recently had a birthday. Happy birthday. Happy belated birthday, Harold. Looking great as usual. We have 230 Harold, 275 Ryan, Bertina at 255. We've got Sonia closing us off at 222. Let's go ahead and take a look at this number. We've got, all right. Let's drink coffee. Okay. Drink coffee. What else? Any other, shake the hands. Woo. All right, y'all. 1, 8, 181. Okay. 181. Yikes. That is with rates dropping. That's with a improved rate environment. Unbelievable. 181. And we can't blame the weather. Wow. Okay. Well, it's going to be interesting to see what the month. That's just 1 week. Oh, let's blame F1. Let's do that. We're really good at blaming 1,000 things. Let's blame F1. It's because of F1, right? No one, it's F1. That's what it is. When is the last time that happened? Well, I mean, we've had some rough patches here. I would say that we have not seen ratios this low, and we kind of have to go all the way back here to May 2022-ish or so for the weekly, where we are probably going to end right around, we're not going to end at 0.60. We're going to end somewhere around, the 0.65, 0.68-ish or so. And we had a 0.63 here back in March. Had a 0.63 in April. Man, we are starting off at a 0.52. We do always start low, no doubt about that. It's, but man, 0.52. But here's the thing. Here's the interesting thing. Low number of new listings. Let's take a look at the year over year. You see, we are down 85 new listings year over year. 85 new listings. We were up 10% 2 weeks ago on the new listings. We're down 9.8%. Are we going to get 85 new listings between now and 11:59 p.m. tonight? Are we going to get 85 new listings between now? What do y'all think? Do you think we're going to get 85 new listings between now? Yeah, I don't think so either. I don't. I'd say we'll get 60-ish or so. New listings. So we're going to be negative on new listings. Interesting. We're up on price increases. We are down 88 on price drops. We're down only 7 on back on the market. That's going to be positive. The concerning part is the fact that 2 weeks ago, we were down 13.6% year over year on pendings. Year over year. And we didn't have F1 then. But then, of course, then we had ACL, right? Wasn't ACL like 2 weeks ago? So that we kind of blamed ACL on that one. So this time around, we can say it's F1. So we're down. Let's take a look at the monthly. Because the weekly, we can always find something in the week that will say, well, maybe it was a combination of F1. We had like the No Kings March, and then we had really good weather. So those are the three things. Those are the three culprits on why we had a disappointing and lackluster week. This is the entire week, right? So let's keep that in mind. This is the entire week. But we're going to blame those three things. We're going to blame ACL, we're going to blame F1, and we're going to blame the No Kings March. That's what we're going to do. So now let's take a look at the monthly, because what the monthly does is that the monthly is going to equalize all of the weekly activity. So let's start taking a look at the month. Let's see what's going on, because we are 20 days into the month. So this is going to give us a lot of really good data on what is happening with the month of October. Y'all ready? Okay, new listings. Okay, not bad. 2390, 2390. Then we're going to take a look at price increase. We've got 410. Then let's take a look. Oh, yeah, we had World Cups games. There we go. We had World Cups. We had some really good NHL games. That was, I would say that contributes to it, right? They had some really good NHL games, some really good college hockey games also. So, Ohio State beat Michigan 4-1. So, Ohio State's doing great. That was, I think that contributed to it. Government shutdowns, hey, we've got, a lot of stuff that we can say, but this is the monthly, so this is going to equalize a lot of things. Okay, so we've got the price increase, price decrease. Excuse me, I got a little bit of a cough here. 4695, 92%. That's going to match September, 92%. Let's take a look at back on the market. We are at 458 back on the market. 19%. Active under contract, we're at 1034. All right, y'all going to guess again. We live in an area of 2.2 million people. The city of Austin alone, right around 1 million people. How many properties so far in the entire month of October went pending? I have not clicked on the number. I have no idea. 20 days. The entire month of October, how many pendings? Come on, let's get a few guesses going. Let's get 5 guesses going. Okay, we've got Melanie Price kicking us off at 678. Let's get a few more guesses going. Oh, I sure hope it's more than that. 720. Jen following up with 720. Anais 700. Y'all staying really close to that 700 mark for the month. Yes, so far this month, the entire month. Ryan at 701. Alejandro at 875. Okay, we've got our 5. Let's go ahead and click here. We've got, it starts with a 6. Imagine if it was 666. I would end the meeting right now if it was 666. We are starting off with a 6. 692. 692. 692, you all. So we've got a 0.61 so far this month, 692, which means that probably going to end the month right around that 6.7, might potentially kind of sort of reach 7.0-ish. 692, which leads me to the I am so incredibly proud of you all. Bottom line, you all, it's a tough market. 692 pending properties for the entire 6-county area. 2.2 million people. Let's just say 2. 2 million people in the entire area. You got 692 pending. You've got 1,726 total properties under contract in the first 20 days of the month. Wow. Let's take a look at sold. So far this month, sold, we're looking at 1,066. Not bad. Withdrawn, we are looking at 651 withdrawn. Almost the same number of pending. Expired already at 280. So we've had more properties quit the market than that went pending, which is shocking. It really is shocking. Let's take a look at the year-over-year comparison so far this month. Can we look at the pending per population? Yeah, I'll print all this out as a PDF and we'll take a look at it. So we are down 32% on the number of new listings entering the market. And we are roughly 66% into the completion of the month. So that's really in line. This is the number that we ought to see, down 32%. But we're down 58% on properties sold, and we're down 48% on properties under contract. We ought to be down closer to the 40% mark. Though it does look like we're going to end the month negative on pending. I'd say we're going to end the month flat on new listings entering the market, just based on what we've seen so far. We're going to be flat on new listings, very similar to last year, but we're going to be down on pending. It's going to beat that 4.9% drop that we saw September of 2025 compared to September of 2024. It is going to be down. That I guarantee you. It was down 4.9% last month. I would say that it's going to get 8%. It's going to be my target. When we revisit this number this time next month and we're looking backwards in time, we're going to be down roughly 8% or so. On sold, say we're going to be down low single digit on sold. That's how this is going to play out as we revisit this. Let me keep on going, take a look at some charts. As a matter of fact, I'm going to do this right here. I'm going to save this here really quick. Let's go ahead and save it. I'm going to close this. I've got another computer right here off to the side because what I'm going to do is open this up on a different computer and then print it all as a PDF. And then we can take a look at the entire thing as a PDF. So just give me a few seconds so that I can get all of this information printed as a PDF. And then I'm going to go ahead and upload it so that you all can see the latest and greatest. So it's just going to take me just a few seconds to upload this so that it's available for you all. Let's make sure that it's updated. Okay, perfect. Looks like it's updated. Let me go ahead and go to new listing to pending ratio. And let's see if it's updated. We've got... There we have it. It's updated. So now let me go ahead and just download this and we'll take a look at all the graphs, look at all the charts, make sure it's all good to go. Now we can take a look at some of the population comparison and all that. Difference between new and pending. We're at 1,122. Let me get my little marker so y'all can see. We're at 1,122. Clearly, we're beating out the past 2 months or 2 years. we're already plus 1122, difference between new and pending. We have to go all the way back to 2022 to get a higher number. Before that, we have to go all the way back to 2008. There's that 1122 right there. So we had a shift. We had 2 years where we were going down. Can you please go back to the listing to pending screen super quick? There we go. Well, which one are you talking about? This one? This the one you're talking about? Going once, going twice, sold. Okay, good stuff. So let's go ahead and keep on looking. There's that increase right there. Last year, 869, the difference. And keep in mind, that was the difference for the entire month of October, and we're 20 days. So this number is going to keep on going up. We're actually going to beat out July. Here's the difference between the new and pending. So that right there is going to be a high going all the way back to 2008. And there's the ratio so far for the month. And you can see here, really interesting, that we were bouncing around right there between that 0.7 to 0.8, looking really good. July, August, September. Then we had October of last year at a 0.79. But we were looking good. We had a good June, good July, really good August. I mean, August really beat last year. August was the crazy good month where every single day in August we had more properties pending compared to last year. This was the August that we're like, hey, maybe the market hit a bottom. This is really good news. Then we had a little bit of a shift right there. And then, I hate to say it, but this is a collapse. There's no other way to say it. Just call it like it is. Here's the new listing to pending ratio currently for the month at a 0.61. Wow. Hard to believe. Let's take a look at, there's that 0.61. It's going to go up. Keep in mind, as we keep on updating this information, especially as the month closes out, a lot of builders are going to put properties pending. So it's not going to stay 0.61 for all of eternity. It's going to go up. What we're looking at, is it going to beat out the 0.79? Absolutely not. Is it going to beat out the 0.77? Absolutely not. Our hope is that it'll beat out the 0.71. I'd say it's going to get very close to that 0.71, probably close to that 0.73 or so. So when you go back to that new listing to pending ratio and you get to that 0.7, that's where we want to be there, right? That neutral market condition, still going to be lower than last year. But if we get underneath that 0.7, that's where we start seeing that inventory buildup, even when you take into account the withdrawals and the expireds. And there's that 0.7 or 0.61 so far for the month of October. We had 2 Octobers in a row where we were outperforming that bottom of 0.71 back in 2022. We have to beat 2022. That's going to be the big indicator right there. Is the market now experiencing more of a pullback than we saw back in 2022? Active listings, 14,242. This is only for the 6-county area. We then have the active listings for the entire MLS that we're going to take a look at. Let's focus on pendings. Let's go to pendings. We've got the new listings there. Cumulative new listings, record high. We just beat out last year. Last year was the second record high. 2022 was a record high number of active listings. You know what we're experiencing here, you all? This is what we're experiencing. 2022, the market peaks. May of 2022, we had a record high number of active listings. Properties came on the market, or some of the properties that didn't sell towards the third and fourth quarter 2022. Guess what a lot of people did? They rented out their properties. So they rent out their properties for like that whole year. That was 2023. We had the drop in the number of new listings entering the market 2023. And then we had that rebound effect. People that leased out their homes for a year. Hey, I'm just going to wait until the market comes back. Then the market now floods with listings. When you look at the number of properties that withdrew and expired, record high number of properties that are withdrawn, expired. And then we have a rush of new listings 2024. And now another record high number of new listings 2025. Which is going to happen again next year. I completely agree with you. I forecast that for the first time ever, we are going to cross 20,000 active listings on the market by May. By May of 2026, we're going to have over 20,000 active listings on the market. Let's take a look at back on the market. Forget about that pending. Let's take a look at cumulative pending. Cumulative pending down 5.3% year over year. This is every single property that went pending from January all the way to today. Now we know this is only October 20th, so we're going to have about what? Maybe another 1,000 or so pendings. So this number is going to go up. But even if we add 1,000 to that 36,349 and we take into account the entire month of October, we're still going to be lower than 2024, 2023. Even if we add 1,000 new pendings that come in the market in the next 10 days. And this is where we get to the pending per 100,000 population. Very important. We're at 67 right now, partial month. It's October 20th. We're still going to have more pendings entering the market. But even if we double the number of pendings, we're going to be close to 2022-23. We know we're not going to double the number of pendings. It's already October 20th. And the week over week is experiencing a pullback, and the pullback is accelerating. So the thought that all of a sudden we're going to have this big, massive bump on pendings, I don't see it happening. There's nothing. I would want it to happen. Don't get me wrong. I would want nothing more than it happen. I just don't think that that's logical to forecast that. Let's take a look at the cumulative pending. Everything that went pending per 100,000. And we're at 1422 right now, which means that adjusted for population, we have to beat 1498 or 1496. 1496 was the lowest one back in 2001. And then we have 1498 in 2010. I would put the chance of 2025 beating out 2001 and 2010 at a 50-50. It's a 50-50 that it's going to beat out the cumulative pending. Every single thing that went pending. It is not going to, for October, forget about it. Bottom line, I hate to say it, the news is the news. We just report it. Facts don't have feelings. We're going to have the worst October on record. That's just, call it like it is. Worst October on record. When it comes to pendings per 100,000 people, we're not going to have a 50% increase on that. That's not going to happen. We're already 20 days into the month. I would say that number is going to settle in the 90s. That's where it's going to settle. Somewhere in the mid 90s, which is still going to be under 2008 at 108. Now, why does this matter? Well, it matters for your listing presentation. It matters for your buyers all of a sudden feeling like they have a lot of choices, a lot of options. It matters on you even presenting this information to a listing agent that is not fully aware of the market, saying this is why we're offering this price. So this is where our access to data gives us that power to sit down with that seller and just have that open and honest conversation with a seller on why is it that we're not getting any showings. And I know that we're experiencing that on a lot of our listings because I'm talking to you all and I've got listings out there So these are conversations that we have to have, and we have to be proactive in having these conversations with our clients. Cumulative pending, we did talk about this already. This is where we take the year-to-date cumulative, everything that's new in the market, minus everything that it went under contract, and we just add everything up from January to now. And we are plus 7,428. Last year, the cumulative was 4,312. In your opinion, what is the best time to list a property between now and Thanksgiving? Between now and Thanksgiving, the sooner the better. The sooner the better. And then my cutoff date would be, if the house is vacant, my cutoff date is about November 21st. If the house is vacant, if the house is occupied, my cutoff date is probably into the maybe November 17th or something like that. If it's vacant, just list it ASAP as long as it's perfect. Lick the floor ready perfect. You ought to be able to go there and just lick the floor and be like, this house is fantastic. It's got to be priced right, of course. It's got to be perfect. You cannot compromise. All right? There are 5 factors that affect the saleability of a house: location, condition, price, the overall market, competition, and what's the other one? Location, condition, price, the market, competition, right? Those are the 5 factors that affect the saleability of a house. The seller only controls 2 factors: condition and price. So if it's not perfect, then the price has to go down. The price has to reflect the quality of the property. Let's keep on looking at a few things. Active minus pending, you all. Active minus pending, we've got a second highest number on record. Active minus pending. Highest number on record was June, which is interesting because this number is supposed to go down. It's not supposed to go up. You see, we go by this degree. It's not supposed to go up by this degree. We go 96.79 to 92.48 to 84. And now all of a sudden we go from, 12.5 to 12.2, 11.7, 11.3. Maybe it goes up a little bit, just a tiny little bit by like 100. But all of a sudden we go from 11,356 to 12,516. That is a big jump that we ought not to see between September and October. It's supposed to go down. We did see it go up back in 2022, but that's when the market hit the wall. May, the market peaks, and all of a sudden, everything just stops. And of course, we saw this little bit of an increase, but not that big of an increase. This is a big increase. Not supposed to see that. We did see that back in 2008. And what else? Where else did we see that? We saw that 2008. We saw that 2022. That's about it. That's about it. So 2008, 2022, and now we see it again right here. Now, of course, partial pending, so this number is going to improve. But we're also getting more properties that are active on the market because new listings are now going up. And here we've got the active minus the pending. We're 92.5% above average on the active minus the pending. And here's your withdrawn plus expired. Last month, 1,888. Withdrawn plus expired. And let's take a look at cumulative. Cumulative withdrawn plus expired. We're already at a 13.8% increase with a partial month. Amazing. And let's take a look at sold really quick. Cumulative sold, 24,272. What we want to do is let's do sold per 100,000 people. So we're at 949 right now. We want to beat out, we want to go past 1,000. That's what we need to do. We need to go north of 1,000. There's no way that we're going to beat out 2003, 2024, 2023, 24. It's not going to happen. What we want to do is we want to beat out 2010, 2011. We want to be north of 1,000. So the ratio right now for the entire year is at a 0.71 ratio for the entire year. That's going to be the ratio for the entire year. Just really amazing. Let's take a look at the daily briefing and take a look at what is happening with the overall inventory. We are currently at 16,527. 16,527. Out of the 16,527, 4,319 are new construction, 12,208 are resale. And here's another number that keeps on going up. We're at 83 short sale right now. That number keeps on going up. Really interesting. Now, on the daily change, we're up by 40. On the weekly change, we're down by 30. On the month over month, we're down by 462. Normal cycle of the market. We tend to see less new listings towards the third and fourth quarter. But take a look at the pending. Let's focus on pending now. Oh, by the way, 59.1% of all active listings have had a price drop. There's your 14.1% increase year over year. And here's another thing. Look at this line going up. Now, this is normal. The line tends to go up, and then it starts going down. This increase is just a little bit steeper than last year. Not by much, but a little bit steeper increase than last year. Just slightly more increase on the number of active listings. Here's your pending. Here is the amazing August that we had, where the entire month of August we were positive. That's going to be your purple line compared to your red line. And we were so very hopeful. And then all of a sudden, second week of September, we just hit negative. And we've been negative pretty much the entire time since. And then that number is actually increased by quite a bit. Even though we did have a little bit of an improvement right there on pending, that is good. Way more than last year, but we're still negative. There's still a gap right there. We're down 4.5%. We went over that. And here's your activity index. New construction at 25.75, resale at 16.45. And here is your activity index. Resale only. Thank you, Aaron Dunnigan. Aaron was here at the office. Was it on Friday? I think it was Friday. And Aaron was actually reviewing a listing presentation of mine. I had a listing appointment Friday evening. And she's like, hey, do you mind if I take a look at it? I'm like, oh, yeah, sure, here. And she's like, oh, wow. So we were talking about this chart, but the chart that I had was for the entire market. So that one was this right here. I had created this one right here for the entire market. All properties. It was everything. And Aaron was like, well, what about resale? And I was like, bingo, brilliant. Yeah, I should have one dedicated for resale. So thank you, Aaron. I appreciate that. So here's your resale activity index. The activity index, very, very simple formula, pending divided by active plus pending. Out of everything that could be under contract, what is under contract? When the activity index is over 30%, that is a market in expansion. That signifies a strong demand and at the very least stable pricing, but oftentimes rising pricing. Equilibrium is going to be between that 25 and 30%. It's going to be a balanced market condition, pretty steady absorption. When it goes under 20%, that is now into a softening between 20 and 25. Not under 20, that's going to be a contracting market. 20 to 25% is going to be your slower sales, rising inventory, a softening market. The red market is going to be your danger zone market, your contraction market between 15 and 20%. That's where the market stalls. There's a supply imbalance, more active listings in relation to what's being absorbed by the market. And then under 15%, it's going to be a crisis market, a frozen market. That is defined as a buyer paralysis, and pricing corrections will accelerate. The reason why it's important to separate the market between active and resale is because let's focus on, and this is the activity index per zip code. I want to focus on Kyle. Let's take a look at Kyle. Something really interesting is happening with Kyle. Because when you look at the new construction market, you've got a really decent activity index. So do you remember what the entire activity index was for Kyle? Excuse me. The entire activity index for Kyle is 29.4%. Decent. 4.23 months of inventory. Very decent. So when you only look at this figure, you've got a listing presentation in Kyle, and you're like, okay, well, this isn't bad. This is a fairly decent activity index bordering on expansion. And then when you divide up what is new construction, what is resale, you're going to have a completely different view of the market. Here, we've got 37.9% activity index in new construction. Fantastic. Really good. Only 3.5 months of inventory. And then you go to resale and you're at 17.5. Well, now we're in contraction. Now we're in bordering on the danger zone here. Very telling. That red number, you know what that, not number, but that red dot, you know what that red dot means? Anytime you see a red dot, it means that the activity index for resale is less than half of the activity index for new construction. That's what that red dot means. That's the, hey, pay attention to this. And then you've got months of inventory for resale is double, almost double, 68.9% higher than months of inventory for new construction. So for all of us Kyle agents that are out there going on listing presentations, please, I beg you, do not only rely on this information right here and you go to your listing presentation, you're like, well, Kyle's doing great. No, don't do that. You've got to segment the data. You've got to break the data down and see, okay, what is being absorbed by the market? And then on top of that, you've got to figure out, okay, well, out of even within Kyle, what is actually selling within Kyle? When you click on that link, this comes up, and this will give you the breakdown of what is selling and what is not selling. Very, very important. So we've got a question right here. Please show us how to find that chart again. I would be happy to. What you're going to do is you're going to go to teamprice.com. You're going to go to Insight and Statistics. And then you're going to go to Activity Index Zip Code. And there you have it, right here. Activity Index Zip Code gives you everything, and then you keep on scrolling, and then it breaks down between new construction and resale. Which, thanks Seth for this chart. This is Seth's idea right there. Hey, can we break it down? I'm doing listing presentations, and I don't feel like the data, like the area that I'm going to has got a lot of new construction. It'd be nice if we had the separation between new construction and resale. So that was Seth's idea. So, and by the way, you all we love feedback here at Team Price. So if you come across anything that needs to be improved on, any ideas that you have, please be sure to reach out to me. Okay, please. Is that updated? I'm looking at 78728. Yeah, it was updated this morning. According to the data, no, there's no new construction in 78728. No active, no pending, no sold. 405, you've got 59. Oh, look, that's almost exactly the same. That's one of those interesting zip codes where 16.9, 16.5, almost identical. Absorption on 4.5 between new construction and resale, almost exactly the same. Demand for those two products, almost exactly the same. Last one, 4.8. 4.8, we actually have a higher absorption activity index in new construction, lower in resale, but months of inventory is actually lower on resale. The lower months of inventory on resale, which is really interesting. All right, let's keep on looking at the daily right here. So this is updated. This is updated, of course. Y'all know this daily. We went over this. We went over this. We went over that. Months of inventory, we're up 13% months of inventory year over year. Slight little increase right there on months of inventory. And let's take a look at the cities that have the highest inventory. Of course, Burnett, Dale, Smithville, Spicewood. Lago Vista inventory went down by quite a bit at 8.33. On the bottom end, we've got Manchac doing very well. Cedar Park, Buda, Round Rock, Kyle. Those are doing very well holistically. Year over year, City of Austin is up 1.6%. Months of inventory, year to date, City of Austin is up 22.7%. We are forecasting 2,402 closings this month. So based on the forecast, we are going to be lower than last year. This includes the forecast for October. And according to our forecast, we will come in right at about 1,001 to be exact, cumulative sold per 100,000 people. So according to our forecast, we are going to beat out 2010, 2011, not by much. And this is adjusted based on population. Now, let's talk about realtors, because number of realtors right now, 17,100 realtors. And because the number of realtors keeps on going down, the number of sales per realtor keeps on going up. So even though the overall sold is down, the sold per 1,000 realtors is actually up because we keep on dropping realtors. Now, this is where the market gets interesting. This is where you cannot make this stuff up, because we've got huge pressure on pricing. We've got record high inventory. We've got a borderline collapse on pendings. And of course, prices are up. Prices are up. We've got the average sold price so far this month up 10%. Not year over year. That's 8.1%. Oh, no. 10% month over month. Prices are up. The average sold price is shooting up 10% month over month. The median sold price is up 7.7% month over month. The sold to list price ratio is now up to 97.09%, which is better than the previous 2 months. How in the world is this happening? It's all about what is selling. So let me go to the famous percentile analysis, because you can see that the upper 25th percentile is up a whopping 5.7%. So the top 25th percentile continues to do very well, outperforming the entire market. That segment of the market is doing quite well. The bottom 25th percentile down by 2.7%. In the top 25th percentile up by 5.7%. So far this year, we've got 9 cities that are up in price and 20 cities that are down in price. And then 1 city, Taylor, zero change. The number 1 performing city is going to be Marble Falls at 15.2% increase year over year, doing really, really well. The least performing city is going to be Burnett, down 17.8%. City of Austin is up 0.6% year over year, which is not bad. Bastrop down 3%. Buda down 5.4%. Cedar Park is up 2.6. That's not bad at all. Del Valley, surprisingly, is up 2.1%, which is really good. So that's going to be your latest and greatest. The absorption rate, sold divided by active, is at 17.52%. And here we have slightly underperforming last year at 17.8%. And then we have our market flow score. And that's going to be if we were to rate the market between 0 and 10. 0 means you see me on the corner of Burnett and Anderson with a sign asking for money. That's 0. And then 10, you see me on the corner of Burnett and Anderson driving a Ferrari. That's how you describe the market. We're right in the middle. We're at 5.68. Good news that this is for September. So we're not going to update October until 5 days from now. 5 days from now, which should be what, Friday? Is Friday 5 days from now? When is October 20th? That's Saturday. I'll have this ready by Friday. So if you come to the meeting on Friday, you'll see the latest and greatest for this for the month of October. We just need way more data to have a number that we can actually work with. But last month, we actually outperformed September of 2024. This is going to be your 0 to 10 market. That's what this is going to be. So really interesting, you all, and keep in mind that this daily can be found on teamprice.com. You scroll down, you have your awesome daily briefing. I recommend, even the way that I structured my listing presentation, which I might do that on Friday. Not Friday, on Wednesday. What do y'all think about that? Doing like a whole listing, working with sellers, like, hey, this is how I recommend structuring a listing presentation in today's market. Would that be a good topic for Wednesday? What do y'all think? That'd be a good topic for Wednesday. Hey, this is how I recommend structuring a listing. So what I did is I just said, hey, y'all, what's y'all's understanding of the market? And I just let them talk. I said, okay, what we're going to do is we're going to do a complete market overview. And then I said, hey, we're going to go over this daily briefing, which, by the way, it's updated on my website Monday through Friday every morning. So you can always take a look at it, show them how to access it. So I went over this awesome daily briefing. And then I went over the zip code data. So we went over the data analysis for the zip code. Then we went over the market report. So it's like peeling an onion. So we're going to do that. Let's do a really good overview on the leasing market. What I'm going to do is click on lease statistics. And then we're going to take a look at the new listing to pending ratio. This was also updated this morning. Sonia Komisarenko. Love that name. Beautiful name for a beautiful person. Ooh, take a look at that, Sonia. Take a look at that. Baruto. Yeah, leasing market is hitting a wall. Hitting a wall, 0.57. Let's take a look at a few more things on the leasing market. Let me go back. And what I'm going to do is take a look at the lease inventory. We have 7,685 active lease listings. That's up 10.5% year over year, up 10.5%. And look at that, just exploding. Number of leased so far, 1988. That's a forecast, by the way. That's the forecast. Last month we had 2417. Do we have a chart for our inventory that goes back 10 years? Yeah, this goes back 10 years. Goes back to 2015. Yep. Absolutely we do. More than 10 years? No, this one just goes back 10 years. Now, on the leasing side, let me show you what we have. We've got the active inventory. We've got the activity index. We've got, we've got the market cycle. Market cycle here goes back to January, but this is just on pricing. This is not on on the that's just on pricing, market cycle on pricing. Yeah, on the actual inventory side of things, we just go back to 2015. But the question is this a historical high? And the answer is yes, it is. Yes, it is. This is going to be a historical high. Even back in 2008, it's never been this high. This is the record high. The record high was September at 7,802, and that was the forever record high in the history of the entire Austin MLS. Okay. Can we have that one? Well, I'm limited on the information that I can get from the MLS. So the furthest that I can go on the MLS is going to be, I'll see. Send me an email. If I can pull that information, then I'll see if I can pull that information. Send me an email on that. Let me see if they have access to this. Might be able to go to 2006. May be able to go to 2006. I may be able to create something like this. Let me show you. Let me go to team price and market update. Actually, I may be able to create something like this right here that shows you the active listings back to 05. I'm pulling it up here on the MLS, and it's thinking. Might not be able. Yeah, they might not have the information. Oh, I know why. It's because, yeah, it's saying, send me an email. Send me an email. I may be able to create just one snapshot of the active listings going all the way back possibly to January of 2006, but that may be a stretch. I've got the information right here. I've got the MLS trying to load that information, but it may not be possible. But if I can, I will. Only because you asked. Even though I don't want to, I probably will, just because you asked. Now, let's take a look really quick on lease pricing, you all. We've got lease statistics, and let's take a look at the market cycle right here. Let me make this a little bit bigger. And we can see that on leasing price, we are looking at, there we go. We're looking at a drop of 8.97% on the average lease price. That peaked August 2022. At 25.68. On the median side of it, that peaked July of 2023 at 2,299. The median lease price is down 10.83%. We had one positive year over year last month, and then that reverse course right there. So crazy. Yeah, I'm still on the MLS, and it doesn't look like I'm going to be able to get the active lease. It's just thinking. It doesn't look like it's going to give me that number. But if you send me the email, then I will absolutely take a look at that. Now, I also received an email asking about the Fred economic data. I do have a lot of Fred economic data available. If you go to Insight and Statistics and you scroll down under macroeconomic data, this is going to be my favorite Fred data. So all these data points are going to be my favorite ones. But keep in mind, the Fred economic data is for what? This is a federal government. And guess what the federal government is right now? It's closed. So because the government is shut down, the data is just not available. So if you go to Fred, let's go to Fred and Federal Reserve of St. Louis. Yeah, it's shut down, so there's really nothing to pull at this moment until the government reopens. So all this information is like gone. They'll update it eventually, but right now all this information is gone. Well, you all, that right there is going to be your Monday morning touch point. Bottom line, what do you do with all this information? Here's your takeaway. One is you got to be obsessed with data. Market data authority is one of our absolute non-negotiables. Right? We cannot control the market. We can only control our actions, us reaching out to people. And you've got to sow in the autumn so that you can reap a harvest in the summer. And I believe that is a proverb. Someone researched that. Sow in the autumn to reap a harvest in the summer. Someone searched that, Google that. And I believe that is a proverb. I believe it's like somewhere, I believe that I know that's a proverb. I know for a fact it's a proverb. So someone researched that, Google that. Sow in the autumn to reap a harvest in the summer. No, bottom line, you all, don't slow down. This is not the time to slow down. If anything, this is the time to speed up. This is the time to, reach out to your people. Make sure that all your market reports are out. That's one of the most important things that you can do is send out your market reports, right? Do those open houses. Keep on, just run faster. A lot of agents are getting, really concerned. And for us, hey, this is the market. The market's like the weather. It just tells us how to act. It tells us how to communicate with our clients. It tells us how to equip our clients. It should not be a barometer to how you feel. It should be hey, I've got the data, I've got the information that I now feel equipped to serve my clients in the absolute very best way that I can possibly serve them. That's why we go over this information. So for me, it's not good news, bad news. It's just news. It's, hey, this is what we're dealing with. This is the reality. For buyers, they have more leverage. They have more ability to negotiate. For sellers, well, we've got to sit down with our sellers and explain exactly what is going on. There's a reason why showings are down. There's a reason why that buyer's agent is submitting what may very well be perceived as a lowball offer. No, they've got the leverage. The leverage is on their side. So that is very important for us to realize that. It is 11:07. I want to honor your time. Thank you all so very much for joining. Super appreciate it. If you do not have any questions, comments, concerns, criticisms, or complaints, thank you so very much for joining. Super appreciate it. I hope you have an absolute excellent day ahead of you. Keep in mind that we do have our Wednesday. We have our Wednesday meeting. Be sure to join us for our Wednesday meeting. And then we do have our Friday meeting. ABOR is open. I'm in town. We do have our Friday meeting. So don't forget, we've got Wednesday and we've got Friday. Do not forget that. Tomorrow, the top 100 will be published. Top 100 will be published tomorrow. So that's another touch point that you can provide for your clients. Thank you all so very much for joining. Super appreciate it. Have an excellent rest of your day, and I will chat with you later.